Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today I want to do a little bit of an in-depth review. This is really a mini review for JP Morgan versus Capital One, and which stock do I think is best moving forward. Now, I thought, looking at some of the income statements, looking at some of the announcements that came out, this was going to be a tough review for me, and it really wasn't. If y'all have been watching for a while, meaning this week, you already saw me go over Goldman Sachs and Ally Bank, and that one was a much closer match, but for different reasons. This one is a runaway, at least for me, so I would really love to hear your thoughts on it. I'll go over some of the criteria that I'm looking at. I'll release more of a framework here pretty soon. The results from the survey are coming in. It looks like the space that y'all want me to go to in terms of high level, or not high level, but actually in-depth company reviews and analysis on what I think about the market and about specific companies. So this is more of a comparison, so let's go ahead and get right into the comparison. So again, Capital One versus JP Morgan. Both are in the financial sector for obvious reasons, but both have very different businesses. And when I talk about like the business, it's about what they do, how they make their money. And sometimes it's not what you think from a consumer perspective. And this is why it's important to have a guide like me who understands the stock market, but know exactly where and how to find this type of information. For me, I love going to the company's website, going to investor relations, and digging into their press releases under financials, as well as some of their SEC filings to see exactly where you make your money, how that money is broken out, and are you leaning one way or another. When I say leaning one way or another, I mean, are you a one-trick pony? So for example, I think Apple makes, of the money that they make, which is a lot, about 85% of their money comes from iPhone in one way or another, which means that number one, you're one trick pony. So you got that, right? You got your iPhone, but then a lot of your app revenue, stuff from Apple Music, stuff from Apple Arcade, all that stuff, the App Store as a whole is all tied to the phone, which means your business is real top heavy. But all that stuff aside, we're not talking about Apple today. We're talking about JP Morgan and Capital One. So what are some of the things I look at? I look at momentum. I want to see how well you are performing compared to your peer, which in this case, JP Morgan and Capital One, versus the overall market. Are you doing better or worse? Both are doing much better than the market in recent times. I'll get to that in a second. I want to know about your employees. That is your greatest, most valuable asset. Are people clamoring to work here? And if so, how does that play out? And does that help your company in any way? In most cases it does. I look at your product. So this is banking, so it's a little bit different, but do you have a product that is what I call a mind reader? The more you use it, the better it gets. It helps you more than you think, and you become reliant on it, like we do with Google Maps. You are very reliant on that, as well as your iPhone and things like that. So these are some of the things we're looking at. Look into the numbers, look into the business, and decide which one is the best of these two right now and moving forward. So let's go ahead and look at JP Morgan's business. They are multifaceted, and again, it's not in a place that most people think. A lot of people think JP Morgan Chase, I go to the bank, and that's just what I see. Not necessarily the case. I have a list of things that they do because it was so much. So they're a very, very large bank, one of the largest for obvious reasons. So you have the consumer bank. That's the Chase that we all know of. I don't know if we know and love it. I've never had a Chase account or worked at Chase, but it is what it is. So you got the consumer bank, you have the investment bank, which is what most people don't see. You have the commercial bank, so business banking, and then you have asset management. So that's their high level, some of the things that they do. So they make their own mutual funds, they manage the assets, they do a lot of that stuff, which again is not something that you touch on a day-to-day basis for most of us. There's 4 different lines of business, all of them are relatively large. So consumer bank, investment bank, commercial, and then asset management. So those 4 things in the last quarter, which they just released earnings not too long ago, so Q3 of 2021, they brought in a net income, which is money you make after the bills, of $11 billion with a B, just for the quarter. For context, in Q2 of 2021, Capital One only brought in $3.5 billion. And they have just two primary lines of business, which is the credit card, which is, what's in your wallet. That's what we all know of, right? And then they have commercial banking. They also do auto loans and things like that, but those are relatively small. But primarily, you get credit cards and consumer bank. I find auto loans fall into that consumer banking category. And that's it. Capital One, and I worked there at one point in time, got out of the investing business. They used to own, what was it? Capital One Investing. I worked there. But they used to have Capital One Investing. They used to have Share Builder as well, which was a part of ING. And then somebody bought them. I don't know if it was maybe E-Trade or TD Ameritrade. Somebody bought that part of the business, and it was sold off. So they've actually gotten out of the investing business. They got out of the regional banking business because they weren't even that big of a bank. And they were closing down branches from where I was, and it doesn't really show up. And the good thing for Capital One is they get to cut out a lot of that overhead. They have an office, I want to say it's the headquarters in McLean, Virginia, and I'm not going to say that's the only building they have, but that's it. When they were maintaining all of these separate branches, it was a little more expensive, a little more tenuous than what they wanted to, and I think they just said, look, we're going to cut this away and just let go of the banking part of this and just kind of stick to loans, which you can do online right now. You don't necessarily need a bank for that anymore. And they do still have the bank because I have a Capital One bank card, which still works. So yes, they do have a bank, but not the same footprint and presence that a JP Morgan Chase does. Back when I worked at Capital One, I think they were only in like 7 states. And that was it. Even back then, this is 2015, 2016, they were still closing branches because of cost. And they've kind of moved to a more online strategy and using their banking sector along with their card and just kind of going back and forth with that and making that work along with auto loans. So that's the business part of it. Now, the momentum is really easy here. Capital One, last 6 months, and I'll post it somewhere over here. Capital One, last 6 months, made 25%. 25% compared to JP Morgan at about 9%. Now, if I'm not mistaken, the stock market is at like 7% or so over the last 6 months. 25% compared to 9%. That's a no contest. But it gets even more pronounced when you look at the past 12 months. You got Capital One at about 120% growth in the last year compared to just 66% growth for JP Morgan. Both are good, but one of these is not like the other. And the answer for me has to be Capital One in this case. From what I can see, they are spending less money, right? And because they don't have the same footprint and cost that JP Morgan has, it's, you get higher growth, you have less cost, everything else is relatively even. Now, I will say that JP Morgan is a better business in terms of safety. I don't have to wake up and think that JP Morgan is going to go broke or anything like that. They've got a CEO that's been around for a while. Jamie Dimon is pretty famous in the financial sector. I think they got great leadership. Again, it's something that I don't think is going to absolutely blow your socks off year after year after year, even though 66% is really good. But I think Capital One, in terms of return, I think is going to be the place that you go to. In terms of where you're going to go and get that credit card, yes, JP Morgan does have the Chase credit card, Blue Sapphire or whatever it is. That's out there, but Capital One is really the name. You can just look at any TV commercial and find that out. But I think Capital One is a place for me for the two. JP Morgan reminds me a lot more of a Goldman Sachs, where they have consumer banking compared to markets. They have investment banking, same thing as Goldman Sachs. They have, larger business banking and all that kind of stuff. I think those two are more similar, but even so, I would still go with Goldman because over the past 12 months, Goldman is up over 100%. I think it's like 101% compared to JP Morgan 66. So even if I wanted to go to the bigger investment banking, kind of expose myself to that part of it that's not just consumer focused, then I'm still not going with JP Morgan. That doesn't mean it's not a good company, it's just not the best one. And that's what I like to look at when I'm doing these comparisons and when I'm choosing stocks in the market, because you know, you don't want to put everything in finance. So I personally, based on my portfolio and my goals, I wouldn't get all three. Because if something happens to the banking sector, if we are wrong about the banking sector over the next 2 years, then you're hit 3 different times. That's not what I want to do. What I would prefer to do is, you know, got me some banks or have me a bank, and then I've got other things, maybe it's insurance, maybe it's technology or fintech, like a Square, like a PayPal, and hopefully get exposure, but also separate that so I'm not doubling my risk or tripling my risk in that case. And there is a difference, right? I'm not going to be mad about a 66% gain. I'm not going to be mad about it. However, I am going to wish I had 100% or 120% gain, which is the case for the latter two, being a Goldman Sachs and a Capital One. Now, if you ask me which one of those would I pick out of those two, that's more of a toss-up. That's another video that we would have to break down. I'm not doing that because I've already done 2 versus episodes in the financial sector. But y'all know me. I already bought Capital One. I got Capital One back in June. I've been talking about me having Capital One back in June. And you know that because if you're on public, you saw when I bought it, right? Don't plan on giving it up. I am giving strong consideration to a company like what's the name of it? Well, Goldman Sachs is one I'm giving consideration to. Perhaps I'll flip it out. We'll see in December when I do those evaluations and reevaluate my portfolio. BlackRock. And BlackRock is the other company. They're not in the banking sector, but they are in the financial sector, and something I'm really interested in doing more about. It might be one of the first companies that would do more of a deep dive into what they do, how they work, and things of that nature. So that is it for me today. Let me know what you think. Let me know if there are any other comparisons, preferably not in finance. We've talked about finance before, but let me know what you think about these type of episodes. What other companies do you want me to compare and discuss? All right, that's it for me. I'll talk to you guys later. Bye.